Global Economic Outlook 2025. A detailed analysis as the world navigates 2025. The global economy stands at a crucial crossroads, marked by moderate growth, high policy uncertainty, and a series of geopolitical and economic shifts. Leading forecasts from the IMF and OECD predict global GDP growth of around 3%, which, while steady, remains below the pre-pandemic average of 3%. Key developments shaping this landscape include protectionist trade policies, China's economic restructuring, Europe's energy and export rebalancing, and growing instability in emerging markets. Global economic growth forecasts for 2025 and 2026 show moderate expansion, with the IMF and OECD projecting 3%/3.1% in 2025 and 3%/3.0% in 2026, which is lower than the past average. The United States is expected to grow by 2% in 2025 and 1.6% in 2026, with growth impacted by tariffs. China is projected to grow at approximately 4.5% in 2025 and 4.3% in 2026, though exports are under pressure. The Eurozone low growth at 1.0% in 2025 and 1.2% in 2026. India continues to be the fastest growing major economy, with growth rates of 6.5% in 2025 and 6% in 2026. Latin America globe showing Americas is forecast to grow by 2% in 2025 and 2.4% in 2026, amid a politically mixed environment. Sub-Saharan Africa globe showing Europe Africa is expected to grow by 3.8% in 2025 and 4.0% in 2026, benefiting from a young workforce but facing high debt. The Arab region Crescent Moon is projected to grow within a range of 2.9 to 3.5% in 2025 and 3.0 to 3.7% in 2026, with mixed results from efforts toward oil diversification. Arab countries. Navigating transition. The Arab world presents a diverse economic picture in 2025. Key players like Saudi Arabia, UAE, and Egypt are undergoing major transformations, while others remain dependent on oil exports or face instability. Saudi Arabia estimated GDP growth, 2025 3.2%, continuing Vision 2030 reforms, investing in tourism, entertainment, and renewable energy. Oil still a major driver, but public and private sector diversification is accelerating. United Arab Emirates growth, 3.4%, focus on fintech, logistics, AI, and tourism, hosting major global events and attracting foreign investment. Real estate and travel booming post-pandemic. Egypt growth, 3.8%, recovering from inflation and currency pressures. IMF-backed reforms ongoing. Heavy infrastructure investments in the Suez Canal and New Cairo. Qatar and Kuwait moderate growth, 2.8 to 3.0%, driven by LNG exports and financial sector activity. Lower reliance on oil prices than in the past. Lebanon and Syria severe economic distress continues due to political instability, hyperinflation, and lack of foreign reserves. United States, trade wars and market volatility. In April 2025, the U.S. administration introduced sweeping import tariffs at 10% base rate for all goods, with higher rates for 60 countries. This protectionist move aimed to boost American industry but triggered major financial repercussions. JP Morgan raised the chance of a U.S. recession to 60%. $2.5 trillion wiped off Wall Street in 1 week. Potential inflation increase due to import costs. China. Coping with tariff pressure. China faces 54% combined tariffs on exports to the U.S. It is now shifting focus to domestic consumption, strengthening regional ties, BRICS, Belt and Road, investing heavily in technology independence. Estimated growth, 4.5%, down from earlier highs. Eurozone, stable but sluggish. Europe's growth remains moderate at 1.0%, due to slower global demand lagging investment disruption in trade with China and the U.S. However, inflation is under control, and energy diversification post-Ukraine crisis has strengthened resilience. Asia-Pacific, resilience in India, caution in Japan. India, fastest major economy, 6.5%. Driven by services, tech, and consumption benefiting from global firms shifting supply chains away from China. Japan aging population and slow growth, 1.2%. Strength in automation and niche exports. Emerging markets and Africa. Mineral-rich economies, DRC, Nigeria, are seeing investment in EV materials. Latin America, Brazil and Mexico remain relatively stable. Argentina still facing inflation. Debt stress is growing due to higher interest rates, risks and uncertainties tariffs and global retaliation, currency volatility and debt risk, geopolitical instability, Ukraine, Middle East, Taiwan, slowdown in global investment, financial markets and capital flow trends, investors shifting to gold, bonds, and emerging Asian equities, capital outflows from fragile economies, Lebanon, Pakistan, crypto markets stabilizing after 2024 volatility. Conclusion: a year of economic realignment. 2025 is not a crisis year, but it is clearly a year of adjustment. The global economic system is evolving from globalization to regionalization, and trade policy, geopolitical alliances, and economic resilience will define long-term stability. Key point: moderate global growth, 3% amid policy risks. And China trade war reshaping supply chains. India, Gulf countries, and select African markets are rising players. Collaboration and innovation are key to thriving in the post-tariff world.